Okay, let's see here. Should be starting. Let me just make sure. All right, cool. We are live. So thank you all for joining. We are talking today about being your own bank with the Certified Bitcoin Professional Committee. And I'm Jessica Levesque. I'm the Executive Director at C4. And we're really excited. Today we have Dr. Stephanie Murphy joining us. And let's start with introductions. Let's do the CBP committee, and then Stephanie will have you introduce yourself. We're really excited to have everyone here today. So Dirk, do you want to start?
Yeah, I'm Dirk Anderson. I'm the chair of the Certified Bitcoin Committee, which means absolutely nothing, just that, they asked me first. I'm also the Chief Information Officer at Salt Lending. And so I've been deeply involved in the actual business of crypto for about 4 years.
Thanks, Dirk. Hunter?
Hunter? Yeah.
Be happy to. So Hunter Albright, I'm a faculty member at the University of Colorado Boulder and do consulting work within sort of payments and the blockchain space. And also have been working in the area for coming on about 5 years now.
Cool, thank you. Janine, you introduce yourself?
Hi, I'm Janine. I'm a privacy researcher and investigative journalist. I've been in Bitcoin since about 2014 or 2015.
Cool. Rodney?
My name is Rodney McInnes. I am the COO and AML compliance ninja at Outlier Solutions, very AML consulting, or I guess compliance consulting firm, because we do other things other than AML, which is everybody's favorite topic. I've been in the Bitcoin space since 2013, it's like 9 years now.
But you're a ninja, so that makes it less boring, right?
It's like the nicest way to say nerd, but yeah.
I think we're all ninjas then. And then we've got Dr. Stephanie Murphy today. You may recognize her voice. She has been on, she was part of our course, and she is on Speaking of Bitcoin, which was formerly Let's Talk Bitcoin. So Stephanie, will you introduce yourself?
Hi, thanks. Yeah, that's correct. I'm Stephanie Murphy. I am mainly a voice actor, but I've also been a podcaster, and I've been interested in Bitcoin for a long time too. I think I heard about it in 2012 or 2011, possibly. So I've been really excited about it for a long time. And in my business as a voice actor, I incorporate cryptocurrency and have been doing that for a long time.
I actually have some of the books that you have recorded as audio books. The Internet of Money behind me. You've done, did you do all three of those? Are all three of them you? Yeah.
Yes, I recorded all three. I also recorded a cool project, which was a book of all of the writings of Satoshi.
Oh, cool. Where can we find that?
All of my books are on audible.com.
Okay, cool.
Just search for my name, which is Stephanie Murphy.
Okay. Cool. We'll put a link to that as well in the YouTube video afterwards. So let's start by talking a little bit about Bitcoin. So today's topic is being your own bank, and why there is no central authority with Bitcoin is our first topic. So let's discuss a little bit about what we mean by no central authority. Anyone want to get us started?
Sure. I have over my shoulder here the Bitcoin white paper, and there's no central authority in Bitcoin by design, right? That's what Bitcoin and blockchain are all about, right? Was the decentralization of the mechanisms necessary to transfer money or transfer data on the blockchain. So by design, there is a network that consists of, in the case of Bitcoin miners, and those miners are the ones who have a mathematical process for validating the transactions on the Bitcoin ledger. So the ledger is distributed, the processing of the ledger is distributed, and that makes it highly redundant and available and transparent, and very difficult for anyone to interfere with the transactions going through it. But it also means that there is no central authority, nobody you can go to and say, hey, somebody stole this money out of my account, I'd like it back. Or, there's no way to kind of claw back like the processes that we have in a traditional or centralized banking world.
I think from an interesting Canadian perspective, our legislation actually kind of defined it interestingly, of the difference between virtual currency and fiat currency, with fiat being like it has to be issued by a government central authority. Virtual currency, not issued by a government, no central authority. So I thought that was kind of impressive for legislation.
Which is very confusing because a lot of fiat currencies these days have been virtual for decades. So
don't tell people that, Janine, you'll confuse them.
That's not how they're defined.
Not all sitting in a vault somewhere.
it's kind of like how much I hate the term unhosted wallet, which makes no sense because if you have a non-custodial wallet, as we actually call it, you're hosting it yourself. It's not unhosted, you're hosting it yourself. But of course, the smart people aren't making definitions or terms for these things.
Yeah,
the
and
person
just
who
like
called it a wallet.
Just like you said, Janine, just because there's no central authority that issues Bitcoin, it doesn't mean that there's no rules. Obviously, it's a software protocol, so it has to have rules, but they're created by consensus of a decentralized group of people.
Yeah, exactly. So there is no central authority, which is why you can be your own bank. So why don't we talk a little bit about what we mean by being your own bank? We talked a little bit about the no central authority, but does anyone want to explain, like if someone says, oh yeah, I'm my own bank, what do we mean by that?
I mean, for me, I don't know, maybe I'm the person who does this the most out of everyone, but I've always hated using bank accounts. To this day, every time I have to send or receive a bank transfer, I actually have to look up what numbers I need and what the process is because I keep forgetting. I do it so rarely. But I find it super confusing and gives me a lot of anxiety because I feel like, oh, if I send it to the wrong person, then I mean, sure, there's some mechanisms that I can get my money back if I make a mistake, but it just all seems so much more confusing. And actually, I would say the UX of a lot of banking apps is worse than at least the Bitcoin apps that I've used. Whenever I've been doing Bitcoin transactions, I've always felt very little anxiety because it seems super clear. You get a string of characters, which is someone's address, or I have to provide that to someone. I send it to them. That's it. I don't have to give them any other information. I check my wallet after 10, 20 minutes usually. Money's there, done. Banking, it's like, okay, so this bank account, sending to this payment processor or the opposite way, it takes about this many hours, or sometimes it takes this many days, not sure which.
Yeah, hours. No,
it doesn't usually tell me how long it takes. There's no way for me to independently. Well, I've been lucky that at least for a few, it seems to only take a few hours, at least in terms of when I'm able to use the money that arrives in the account. I don't know if it's actually arrived there because, as we know, like the money actually being in the account is kind of all up to the service, whether it's actually there or not, whether they have it or they're just, maybe it's low enough risk that they allow you to use that amount. But yeah, for me personally, I love being in my own bank because one, I know exactly how much money I have. I know exactly how to access it. I know no one can take it. And it's very simple for me to send it anywhere that I want to or receive it from anywhere, which is not the case for most bank accounts. Like I have a bank account that only sends within a given national country. I have another bank account that can do kind of international, but mostly kind of region specific transfers. It's all just very confusing and not as fun.
It's interesting, Janine, because I think your perspective is different than most people's. Most people are more comfortable with banking, and that's been, at least for me, that's what I, grew up with. That's what I was introduced to as how money works. And so learning how crypto worked is what gave me the anxiety that I still experience it when I'm making transactions. Even if I know it's going through or I can see it on the blockchain, I still get nervous about it just because it's something different. I don't know, does anyone else experience that?
For sure.
No, I would agree with that. And I think part of that is we have to recognize how and why the original banking system came to be, and a little bit what's enabling the transition to Bitcoin and to the technologies that allow us to be our own banks, right? So centralized banking came to be because the investment and the systems really required sort of more capital at the time to sort of put that infrastructure in place. And I think what we've seen over the last 20 years, this transition into decentralized capabilities is now allowing that technology to shift and enable the technologies that support Bitcoin and the capabilities and the protocols. But I do think that there's a big learning curve, right? To transition people from that level of thinking and hand-holding to then being your own bank. And Stephanie, I'd be interested in your point of view. We were referencing it earlier. When you think about that journey to self-sovereignty, how do you think about it? And then I think the rest of the panel can also comment on it.
Yeah. Well, it is kind of, this is a great point, Hunter. It's like a spectrum between, having someone else be your bank and being your own bank. It's not really a on-off switch or a binary thing. It's more like you can think about it as like moving up a staircase where you're taking a step towards greater sovereignty, which is up at the top of the staircase, right? So if you're starting out at the bottom, maybe, you've never used cryptocurrency, or you've never used a self-custody wallet, or you just don't even know where to begin. You could take a step by just, downloading a self-hosted wallet and playing with it, or, doing a couple of tests and with a small amount of coins, or, some of them have like testing features. So, it's not an on-off switch, like we said, it's a spectrum. But I also want to go back to, sort of why would you want to be your own bank, right? Because as you said, Jess, it can be kind of anxiety provoking, right? It's like, on one hand, you can take responsibility for being your own bank, and you can feel empowered by that. But you can also, on the flip side, feel nervous, because if something goes wrong, who do you have to blame except yourself, right? You have to suddenly make sure that you're responsible for securing your funds and for making sure that nobody else gets access to them. And it is possible that, someone else could still come and try to steal your funds, or that something could go wrong with the software or whatever. And so it is like a lot of responsibility. And, I think people need to kind of adjust their mindset if they're going to get into being their own bank, because we're not used to taking responsibility for things like our own security. And that's why we're, trying to educate people about what it's like to be your own bank. I think an important part of that is getting into the mindset of taking responsibility, along with, with great power comes great responsibility, right? Along with it being empowered to be your own bank. And
yeah, I think that's absolutely. Oh, sorry, but
oh no, go ahead, Dirk. I'll jump in again later.
yeah,
I wanted to talk about why.
That's absolutely true, right? I mean, when you stick your money in a bank, right, they're responsible for the vault that is holding it, and even without getting into the reality of how much cash actually sits in vaults, right? Conceptually, at least, we look at it from the standpoint of the bank is responsible for protecting it. The bank is responsible for the accuracy of the transactions being sent from one place to another. And we take all that on when we become our own bank, right? And that does, I mean, there's risks and issues that come along with that, right? I mean, in some ways, it is a little bit, even if you're using hardware wallets and stuff, there is a little bit of that idea of it's, sticking the money in your mattress, right? You become the target potentially for somebody who wants to steal from you instead of the bank. And and while Janine's absolutely right, the thing that makes me comfortable with it, or more comfortable with sending transactions, is that I'm always nervous right up until I hit send, but then as soon as I see it show up in the destination wallet, I know I'm good, right? I mean, I can actually personally verify the accuracy very, very quickly, but the hitting send always makes me a little bit nervous with larger amounts, because not all blockchains have good checksums and stuff in their addressing. And so, you drop a single digit off the end of that address when you're cutting and pasting or something and don't notice it. And you can just, send crypto out into the ether where it will never be recovered. So there's a little bit, there are things that are rightfully, I think, Jessica, nerve wracking or stress inducing in doing that. Right. And so it is a matter of becoming educated, of understanding how the pieces work. And I think, Stephanie, you're right on that you step into it, right? You start playing with it a little bit at a time, and you explore, and hopefully, you have some people you trust that you can explore with at this point until it becomes a much more ubiquitous process.
I think there's a really good point there of the education piece where, Janine talking about to relearn how to send a bank transfer every time that she does one. There's learning involved there as well. But one of the big differences is when she affects that transaction, it disappears. It's gone. You don't know where it went. You don't really know how long it's going to take to get there. You just, you trust that the bank will facilitate that and do what they're supposed to do. Where when you've educated yourself to a reasonable level Bitcoin is as an example, I can send a transaction and I can immediately go to the mempool and see it sit there and waiting. And then I can watch it get confirmed, as soon as it gets confirmed. And then I go into the block and look into the block and see the transaction. It's very transparent to watch and feel a little more comfortable with your transaction versus a bank, which isn't the case. You just don't have the perspective in. Now there's the safety feature of the background of it being a bank and insurance and blah, 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 blah. But the transparency of the crypto space is a really powerful tool when you learn how to use it.
And we keep mentioning that, but it's not like banks are, it's not like you can always get your money back, right? there are banks in the banking system where if the money goes there, it's gone and you're not getting it back. So there's, it's not like that's, 100% one way or the other. So I just want to be clear on that.
Yeah, that's a great point, Dirk. And also before you were talking about people who put money under their mattress, literally cash under the mattress, a physical mattress like that. And think about the risks with that, right? Like your house could burn down, it could flood, the cash could get destroyed, someone could steal it. It's not necessarily secured, but people still actually literally do that, sticking cash under a mattress or keeping it in their home somewhere where it's vulnerable to fire and water damage or theft. And they do that because it's not safe to keep it in a bank. And they think that the risks of keeping it under their mattress or in their home is less than the risks of keeping it in a bank in the jurisdiction that they're in. And that is sometimes true because, there's all kinds of things that can happen with bank accounts and third parties custodying. First of all, not everyone can even get a bank account, right? There's many places on this planet where it's not available to you. And credit is also not available to you in every place around the world. So there's that. And there's also how safe is it? And can the government just reach into your bank account and confiscate your savings in order to fund money that they've spent? Well, that doesn't seem fair, but this has happened many times around the world and many times throughout history. So there is the risk of that. There's also inflation, which is just, when a central bank just creates more money and the value of all the money that's already out there, including any money that you may have saved. Oh, yeah. And it's transitory. And actually it's good. Yeah, we went from it doesn't happen to it's transitory to it's good here in the US recently. So obviously it does happen. And that affects the purchasing power that you have as an individual. And I always like to say that money it kind of represents your lifetime. Like you put in work or you put in capital to create more money, and then you store it like a battery for later when you need it, right? To pay for your life. And if someone can just decrease the purchasing power of that money that you have managed to save up or that you have in your possession, it's almost like stealing away your lifetime. Like it's really offensive. So I can see why folks are afraid of that. And they want to take steps to protect themselves from having their purchasing power diluted. So, those are all reasons why you would want to be your own bank. If you need some more reasons, around the time I got into voiceover, I was changing careers and I was looking at like a complete lifestyle change. And I looked into the idea of permanent traveling, which is like just traveling around the world and going into different countries and not really having much of a home base. And I had a number of friends and people I knew that were doing that, and they all had problems with banking, right? Because, how do you take a bank account to a different country? It's not always possible. How do you get a bank account in a country where you're not a citizen? That's not always possible either. And you'd be surprised how difficult it is to port fiat money around the world. Also, just sending it across borders. As when I started, an online business where I sell basically like a service over the internet, which is doing voiceover, I started getting clients right away that were all around the world. And I was really surprised at first when I started out how difficult it was to accept payments from clients that were not in the same country as me. So, those were reasons that were really top of mind for me when I first started out. But also now we're seeing increased deplatforming and debanking of people who are politically undesirable to the banks. This has happened in Canada recently with the Canadian truckers, and there's many other examples. And, some folks are more concerned about that than others, but I mean, I think anyone should be concerned because even if you are not a target of this right now, you could be in the future when the political winds change. And just the idea that an institution like a bank could take away access to your own money if they decide that they don't like you or they don't like what you say or what you believe or what you stand for or what your business sells or something like that. That's concerning. So, yeah.
Yeah, I think that was one of the things that really kind of from a social perspective triggered with me when I got into this industry was the idea that when you are your own bank, your bank moves with you, right? You have the ability to take your, the access to your assets wherever you go. And I think that's particularly, right at the moment with the Ukrainian refugees, but with everything we've seen over the last few decades, with all of the refugees out of southeastern Europe and stuff, it might not even be that the bank necessarily or the government even necessarily initially tries to take your assets away from you. But you wind up in a situation where you have to like flee quickly or leave or travel and don't have the ability. I mean, the city's being bombed. You don't have the ability to go into your bank and withdraw your cash to take it with you, while you head someplace else. And with crypto, it just goes with you. It's wherever you are because of that decentralized nature of it.
If you're holding your own cryptocurrency, right? There is a, I guess, caveat there in which if you have your crypto or your Bitcoin in an exchange and you're not holding it and you leave, there is a chance, if you leave the country, there's a chance that you no longer have access to that. Or if they decide that, the government in the country that exchange is in decides that they're going to make a change or they're going to do something to that, you can potentially lose it because you're not your own custodian. And so I think it'd be helpful for anyone who's not familiar with the difference between custodial and non-custodial to explain what we mean by that when we say holding your own crypto versus having somebody else hold it. Who wants to jump in to explain the difference?
I'm of the opinion that crypto banks are actually often worse than regular banks, not only because it is often harder to find out who runs them than a regular bank, but also they haven't been around very long. They also either tend to be, let's say, so risk tolerant that they allow people into their business who shouldn't be there and have access to customer records that they shouldn't and end up abusing them. Not that doesn't happen in regular banks too. Or they're so risk averse that they basically end up being more restrictive than a regular bank is, even though they use marketing terms like open financial system. We're building an open financial system, except we're actually excluding more people than the existing one, which makes no sense to me. yeah, so essentially custody with fiat and crypto is the same. It's someone else holding your money. And actually, I would say it's to some degree even worse with, oh, that was my cat, sorry. I would say custody with crypto banks is actually even riskier because, if your bank somehow mishandles your money, there's this giant legal structure that maybe you have a chance to claw it back because, they sent it somewhere else that's also a bank. They can be compelled possibly to get it back for you. But if a crypto exchange does the same thing, that money can go anywhere to anyone, and you might never get it back, and it can be gone in an instant. So personally, I see crypto banks as actually riskier because, part of that is because of the characteristics of things like Bitcoin, because you can send it to anyone, anywhere, at any time. Anyone who gets access to those coins that the exchange is holding potentially gets access to everyone's money, including yours, and they can very easily dispose of it to wherever they want, whereas that's a little bit harder with a regular fiat bank. And it's permanent. Someone has to literally go after that person. They could be anywhere in the world. You may never find out who they are, and that's often what happens. So custody is essentially the same, but I would say it's actually riskier when you custody your funds with a crypto bank or an exchange. Essentially the same thing, except one has a bigger trading focus, where they hold the keys to the wallet. They hold the keys to everyone's wallet. The balance that you see in your account may or may not be the actual balance of the coins that they even hold, which we have seen in some cases where the exchange uses people's funds, for example, as collateral. We've actually seen that recently, I think, with Coinbase. Coinbase tried to get a loan with Bitcoin, and it's not entirely clear where that Bitcoin was sourced from. So yeah, that's essentially what happens. Whereas when you're self-custodying, that means you have the keys, no one else does. Or if you have a multi-sig, then there's multiple people with multiple keys or multiple devices with multiple keys. And you can always, decide what happens with your money, as long as you're taking basic security practices to make sure that no one gets access to them.
Yeah, good. Like coins on an exchange, you can look at as an IOU, that they hold it. It's not necessarily segregated. It's going to be commingled with everyone else's. There's not a common standard as of yet of kind of proof of reserves. We've had a couple in Canada that have done it, which is fantastic. But yeah, it's still similar to Janine's point of it being a bank, versus the cash in the mattress method that Hunter alluded to. So kind of custodial versus non-custodial in that sense.
Custody is one of these words that I hear and I immediately think of like having custody of a child. Like a custodian is someone who takes care of and stewards something that is really important and valuable. And like, people go to court over this, like who has custody of this child and it's partial or whatever. And custody in the cryptocurrency sense is also custody of something important, which is the keys. It's all about the keys, right? In cryptocurrency, we have public keys and private keys, and that's like what the encryption is based on, public and private key pairs. The public key is like your address of where, you can give that out to anyone and it's safe to give to anyone. It tells them where to send coins if they want to send it to you. But the private key is what allows you to spend those coins once you receive them. And the private key is something that you need to keep private, because if you don't keep it private, someone else can actually spend your coins. So the private keys are what allows you to spend the coins, and whoever has those has custody of those coins. So that's what we mean custodial versus non-custodial. It's who's holding the keys, who's holding the private keys. And if you are holding your own private keys and you are the only one who's holding your own private keys, you are self-custodying those coins or that wallet. If someone else is holding the private keys, and that includes if you keep your coins in a crypto bank, like Janine was mentioning, or on an exchange, that other entity has control over when those coins are going to move out of those addresses. So they are custodying the coins. They're the ones who are in control.
Yeah, Stephanie, I like the point you're making about self-custody. I think that's a better term than non-custodial because it represents the responsibility that we have to take on for those keys, for that capital that we are going to self-manage. And I think it's a spectrum. I think we brought it up before, is that you can participate in the space and be self-custodial for some amounts, for some purposes. And that's completely, I think, reasonable and actually almost to be expected to allow people to, start to become more comfortable with what they want to manage and how they want to manage it. I don't, just like we, I think a lot of people employ advisors and other educated and sort of trained people to help out with elements of our lives, that this is probably no different. It's just starting to have more options with who we can go to and what are the tools and technologies that could be leveraged.
It is also possible, we should say, to share custody of keys, because now it's possible to do smart contracts or multi-signature type schemes where there's more than one key holder or more than one custodian of the keys. So you can set it up basically any way you want, but it's like, an example would be, let's say that there's two people, maybe they're like a couple or something, and they want to have kind of like a shared account where they can both spend crypto from it. They might have one of two multi-signature set up where either one of their keys would work. Each one has a separate key and either one will work. You might have a company where there's like a board of directors and 2 out of 3 of them, let's say, have to approve any operating expenses that are spent from the company's budget. So you would need 2 of them to sign the transaction with their keys, 2 out of the 3 board members. So things like that are possible, where it's possible to share custody of your private keys. And if you're talking about exchanges, I'm sure they do use multi-signature setups a lot for security purposes. At least I hope they do have some kind of multi-factor security going on. But the point is that if you are just an individual and you don't have the majority power or the only power to exercise your private keys, then you're not really in control of that money. It's not really, Andreas likes to say, not your keys, not your coins. And that's absolutely true. It's not really under your control unless you have the keys or you have the ability to access the keys.
Yeah, I have an example of this happening to me recently. I was using an exchanged off-ramp, and I exchanged, it was like USDC on Polygon, and I exchanged, and then I sent it to my bank account, and I was sent an email from this exchange saying that I had, even though it allowed me to, I had moved it too quickly, and they were going to liquidate, if I didn't repay, they were going to liquidate other assets within 24 hours that I had staked. And I was like, what? And I was traveling. I was like, it's one of those things where it's like, I should have known better, but still, like, it showed as mine. And so I sold it. And so it's just interesting that this is something that I have no control over it. Even though it was in my account, it wasn't really my account. It wasn't mine. They can choose to do what they want with it. Scary.
Yeah, one thing I want to pick up on what Stephanie said is the multi-sig, which I think is interesting for 2 reasons. One, I've known people that have used multi-sig as a way to learn together, that they have each other sign off on transactions. So gives them a little bit of protection, but also sort of a peer to go through the process with. And then equally, it's possible to have 2 different wallets or multiple wallets, for ourselves. And so that we have to sign it twice just to help ensure that you don't make a mistake on the first signature and that you're sending it somewhere you don't want to. A little bit of a safety net, which I think is a neat way to sort of think about multi-sig from an individual perspective.
And I would
Yeah,
go even,
definitely.
I was
Okay.
going to say, I'd go even a little bit further there. I was going to say around that multi-sig, right? I mean, again, if we're talking about being your own bank, right? One of the problems is that can exist with that is that it is guaranteed when we are our own bank that at some point we're going to go bankrupt because, death and taxes, right? So if you're the only person who has access to those funds, right, because you are being your own bank and something happens to you, the funds are gone with you, right? There's nobody. That's the trade-off for the security of the system is that nobody else has access to those. And so again, when you're being your own bank, this is another one of those things that you need to take into account is how do you transfer your assets to your beneficiaries, under those sorts of circumstances.
Pamela Morgan's ears must be burning right now.
Yeah, I think so. Because there's a great book on exactly how to do that.
I'll put a link in the chat so anybody who's interested in learning about crypto asset inheritance planning can check out her book or her course on that. Let's, before we close for today, let's quickly do a few CBP exam questions that relate to this. So this is a true or false, and it's in the exam. It's every dollar in your bank account is backed by a paper note in the bank's vault. True or false? And why?
False.
False with a laugh attached to it.
It is a very small percentage of the actual bills that are floating around in circulation that actually are backed, right? And then on top of that, the bills that are actually, your money that you actually put into a bank, because there just aren't, there aren't enough bills to account for all of the dollar value that's out there.
Yeah, we don't live in the water, unfortunately. So there's no vault of coins.
Yeah, the money supply has different categories. There's the portion of the money supply that is in paper bills. Then there's the portion of the money supply that is digital. And then you also have the factor of, I think the legally mandated minimum for most banks is that they have to have 10% of whatever the total is for all the accounts of their customers. They have to have 10% of that actually in their reserves. Which is, in my opinion, super low, which is why, if for whatever reason you want to go to your bank and take out all of your money in cash, one, they're going to ask you a ton of questions because apparently this is a suspicious activity to want to have all of your money out of the bank, even though this is something that people used to do all the time back in the day, because they would go to the bank with all of their money and put it in. So number one, they'll ask you tons of questions to even initiate the process. And then once it's initiated, it'll take several days, if not weeks, for them to actually give you, depending on the amount of money, of course. I'm sure most people won't have that much money in the bank that they couldn't get cash for it, but it's possible. But yeah, so. Yeah.
Yeah, they have to file reports on you too, at least in the US.
Yeah, anything above, they might have changed it. I think at least anything above 10K, they have to file a report.
It's only for deposit.
Oh, really? It's not for withdrawal. What's the policy for withdrawals?
There is none. There's no reporting for withdrawal. It's if you deposit 10,000 or more, that's when a CTR in the US and an LCTR in Canada.
Oh, that's interesting. Because like the classic example I've heard where people have had difficulty is the ones who want to buy a car, for example, in cash. And when they tried to take that much out, then sometimes especially the last couple of years, the dealerships have been a bit not willing to do that, or they have to file something. I'm not sure if that's on the bank side.
In the US, the dealership would have to file a CTR because they received $10,000 in cash. So everyone in the US, business-wise, receives 10,000 or more in cash. They have to fill out a CTR. In Canada, that's not quite the case, but it's the receipt of 10,000. So if you're just withdrawing to take your money and stick it in your mattress, the only thing you could potentially be looking at report-wise would be a suspicious transaction. And that's hence, usually why you're getting most of the questions. But there's no report required by the bank to say that Janine withdrew $10,000.
Well, if the bank
Yeah,
doesn't, sorry, go ahead, Janine.
I was just gonna say quick on the point of self-custody. I've actually never custodied any of my cryptocurrency with anyone else. I've always held it myself. But the funny story I have about a custodian that made me distrust them is the first time I opened a bank account, I didn't even put very much in, and I got my debit card, and I went to go and actually use it because I thought, well, I put money in the bank, I should be able to spend it now. And the transaction didn't work. And it was the same day, it was like a few hours later. I went back to my bank and I said, my debit card doesn't work. And they're like, oh, yeah, that's just because it's a new card. And I thought, well, that's a problem. If you get a new card and it doesn't function because it's a new card, how does it not become a new card?
Yeah, and we were talking about the reserves before. How much actual cash do banks have in their custody? And I guess it's legally 10%, right? At least they have to have 10%. That means if everyone wanted to go to the bank and withdraw their own money, or what's supposed to be their own money, at the same time, they wouldn't be able to, because the bank wouldn't be able to cover it. And there are situations where there are bank runs where everyone has the same bright idea at the same time, because it makes sense to take their money out of the bank, usually because of some kind of political instability, or the government is actually confiscating funds that are in people's accounts. This happened in Cyprus in 2014, and it's happened many other times in many other places. And so, yeah, that's just something to think about, right? Like, if you wanted to take your money out of a bank and everyone else also wanted to take their money out of the bank at the same time, you might not be able to.
Yeah, there's a great scene in It's a Wonderful Life where everyone tries to run in and do that, and they don't understand that, your money's in that person's house and that person's house. Yeah. Okay, actually, you know what? I think we should do a CBP trivia coming up with questions, because I was just looking, we've got a bunch of other questions that are related to being your own bank. But I think it'd be fun to do a whole being your own bank kind of trivia related to the CBP prep, like CBP exam prep. So maybe we'll do one of those coming up. So I'm not going to go into any more of those, because I think that would be kind of fun to do a whole study session with them. But I do want to leave a few minutes to have anyone say anything else about being your own bank, anything we haven't covered that we think is important to add to today's live stream.
So I just feel obligated to throw in the comment, being the one person sitting here that actually works for a company that custodies other people's crypto, that there are, like anything, right? There are circumstances and reasons for doing that, right? So we're a lender, right? We hold collateral for lending, just like somebody holds a lien on a house, or or something else like that. And so as you're balancing out becoming your own bank, and in those steps of becoming your own bank, right? I think it continues to be important to just, and to Janine's point, to absolutely do your research to understand the risks associated with where you're putting your crypto, whether you're holding it yourself, whether it's self-custody or not. That you evaluate all of the risks that are associated with that, and that's kind of the whole point of becoming your own bank.
Yeah, I think that's a good point. There are different companies, exchanges, lending. It exists because there is a need in some ways for people to do that. Some of it, like for lending, some of it in terms of it's can be challenging to just jump into crypto. You want to take those, baby steps up the ladder, like Stephanie was saying. But yeah, there's definitely, a reason. If it wouldn't exist if there wasn't a purpose, and I like to think that it benefits some people for sure.
And we're moving more and more in the direction of decentralization of most all of these things, right? But it's a nascent industry, a lot of that too, right? And we've seen just recently that that the decentralization of that there are decentralized lenders that do exactly the same thing that we do with us in a centralized way, but there are risks associated there still, right? I mean, the smart contracts and particularly the bridges where they're converting one currency into another become points of risk, and so we still there's a lot in our industry that's still being figured out.
Which, if people are interested in, in those problems and want to solve them, I mean, this usability question of how to make self-custodial mechanisms and accounts and tools more easily accessible, more easily understood, and more intuitive will be a huge enabler for more people to be their own bank in the future. Today, it requires a lot of technical sophistication in order to do it. And there's, Jessica, to your point earlier on, there's a lot of anxiety around that, especially if you're not somebody that's comfortable with technology. And so as a community, I think we have to continue to work to solve that, to make the potential of the technologies more available to more people.
Yeah, and to your point, I'm not a technical person. When I joined this space, I didn't know what I was doing. I didn't know how, like I'd heard 2FA, but I didn't quite know what exactly that meant. I didn't know not to get, messages on my phone as 2FA, things like that. And I've learned because of people who are already in the space who want others to join. It's not this exclusive club. There are the people that are in this space want to welcome more people in and are happy to share this information. I mean, everyone on this committee and call is here because they care about educating people and want to increase the number of people in the space, because we all see, it as valuable. And I think that says a lot about who already exists in the space and how welcoming we are to, the newbies, and that there are resources out there through C4, through the podcast, Speaking of Bitcoin, that Stephanie's on. I know there are a lot of different options out there. So if you're listening and you want to learn more, there are plenty of resources out there, free and paid, that you can find, available to learn more.
Which I think is a really important point to stress to everybody. Is we all started from zero. None of us were born with knowledge of Bitcoin or cryptography or anything like that. Like, people spent time learning. And while I have been learning pretty ferociously for, almost closing on a decade at this point, I at one point was not knowledgeable on this at all. And I remember leaving a Bitcoin meetup downtown and getting really frustrated because I didn't know what anyone was talking about. I don't know anything about economics. I don't know anything. Like, I hadn't heard of half of the words that people are saying. And I was angry and was like, I'm not going back. It's stupid. This is dumb. Because I don't know what it is. It's not important to me. And Amber, if anyone knows Amber from Outlier, challenged me and was like, so do something about it. Fine, then I went down the rabbit hole, as everyone said, and I spent months of just like ingesting as much information as I could. And well, that's not necessarily the route you have to take. You do have to, to do a little bit of learning, and everybody's done that. Some of us more ferociously than others, some of us longer than others, but everybody started at zero. And moving from 0 to 1 is the biggest step, and is a big step at this point still. And then you've got people like Andreas who have gone from 0 to 1,000. And so don't compare yourself to some of the folks like that, but know that that step is something that we all took. It was all like, it was intimidating, and eventually it starts to make a little sense. And so, when you read the white paper, it's just nonsense for the most part, but eventually that nonsense starts to turn into English or whatever, native language you're reading it in, because it's now in a few different languages. It's that piece of like, don't just look at it and think I'll never get there. Little by little by little by little, you'll reach a point where you can look back and be like, oh wow, I've actually learned quite a bit and know I know what cryptography is, and I know all of these words that made no sense to me before that were really scary now make this much sense. And then they'll make this much sense, and then they'll make this much sense. And at some point, someone will ask you a question and you'll know the answer and can tell them about it. And that's a really empowering feeling. Having gotten that, especially in this committee, of kind of a reassurance that's like, okay, my imposter syndrome is smaller than it used to be. It's still pretty big, but it's smaller. And know that everybody's been there, and everybody will go through it at some point on that journey.
Yeah, I love that. I think that's a good note to end on, except for a shameless plug for our certified Bitcoin professional course and our prep book. If you're interested in becoming a CBP and want resources, that's a good place to look. We also have free videos on YouTube, including this one, if you want to find more information there as well. I just want to thank you all so much for being here today. I think what we do really matters, and I love that everyone has volunteered their time to help others learn about how to be your own bank and how to use cryptocurrencies. So thank you all for joining. Does anybody else have any parting words before we say goodbye?
Just thank you so much to our guest, Dr. Murphy, for being here. Really appreciate it. And thanks for coming and sharing some knowledge with us.
Yeah, appreciate you being here, Stephanie.
Thank you so much. Yeah, I didn't know I was the guest, but
I did want to committee.
You're a special guest.
Oh, yeah. I feel special. Well, I actually did want to give just some parting thoughts, which is that if there's anyone listening who is new and who is feeling overwhelmed, just like Rodney was talking about, and you're not sure what's the first step that you should take. Maybe you have some cryptocurrency, but it's currently in an exchange or one of the crypto banks or something like that. The first step that I would recommend taking that will get you more sovereignty and more control over your own funds today is to just do some research and figure out what kind of a self-custody wallet you could download and try with maybe a small amount of funds, like $1 worth or something. Try just sending a transaction to yourself from that exchange or from that crypto bank to your self-custody wallet, receive it, get the notification, and then send it back if you want, or send it to a different wallet, or send it to a friend, or pass it back and forth, and just get comfortable with using a self-custody wallet yourself. Then maybe if you want to take another step up after that, try a different wallet and see the differences between, the first wallet you tried and the second wallet you tried. Send transactions to yourself. Try buying something with crypto if you're interested in that. Try creating an invoice and then pay it to yourself. There's multiple things you could do. Maybe if you want to take another step after that, you could try a multi-signature wallet and play around with that. You could play around with the Bitcoin Lightning Network. You could play around with a hardware wallet. You could order a hardware wallet and try using that. And then finally, if you want to get even more sovereignty, once you feel comfortable, you can teach others, like, just like Rodney was saying, you can share this with others. And even if you don't have it 100% figured out, or you don't feel 100% comfortable, you can figure it out together with your friend who you're sharing it with. So I think that's really been part of the spirit of the crypto community ever since I first found out about it, is like, we're all kind of like figuring this out together. This is a new thing, and it's okay to make mistakes, and it's okay to try things and learn and just play around with it. And through the process of learning, you get this like deep appreciation for how cool this technology is. So yeah, that's what I would say. If you're overwhelmed and you don't know where to start, just try playing with it. Download some software, do some research about what kind of software is best for you. I'm not going to recommend any specific wallet, even though I've tried a lot of them, but you have to try it to see which kinds work for you. And then just try sending transactions to yourself and see how that feels. And I guarantee you're going to get more comfortable with it. Oh, also try backing up your wallet. That's another thing I would say is like part of the first step. You have to practice backing up, but most wallets will prompt you to do that.
Mm-hmm. Yeah.
Stephanie,
So
you keep talking about taking steps up. Is there a reason why you're saying steps in particular?
No, just because of this staircase of self-sovereignty that we came up with on the show. Speaking of Bitcoin, Andreas Antonopoulos is a co-host of that show, and I think it was like a couple years ago at this point, we came up with this like staircase of sovereignty, just to show that it's a spectrum. It's not an on-off switch. It's not like you're either self-custodying or you're not. It's like you can get increasingly more and more control and more sovereignty over your finances by, doing little baby steps, and they're going to get you closer and closer to that end goal. Just like all kinds of sovereignty, not just crypto, are a spectrum of steps, right? Like we're talking about being your own bank here today, but I'm kind of learning right now how to be my own grocery store. And that's interesting. But it's a learning process. And it's definitely steps and steps. Like, a couple of years ago, my garden was like pretty lame. Last year, it was much better. And this year it's going to be amazing. And who knows what it's going to be next year. So that's the point. It's all about learning, and it's okay to make mistakes, and it's okay to try things.
Yeah, I love that.
Yeah, I'm on the bottom step in terms of gardening at the moment. I'm growing tomatoes in my window.
Oh, hey, that's
I'm
cool.
doing the same thing. Same exact thing. Well, hopefully we all become great gardeners, just like we've become, advanced users of cryptocurrency. So on that note, thank you all so much for joining. For those listening, please, take that first step into self-sovereignty. Just download a wallet, see what it's like to send transactions. Stephanie, thank you so much. I know you weren't aware you are a special guest, but you are special and you're a guest. So thank you for being here. And
thank you.
Thank you all. We'll see you next month for another live stream about Bitcoin. Take care.
Yeah.
Thanks, everyone.